The earnings tax is very important to Kansas City. It's a fair tax, it's critical to the city, and it's a smart tax. Uh, Cities rely on a number of different revenue measures to pay for basic services. In Kansas City, we rely upon the earnings tax, the property tax, utility tax, and sales tax. We've got a good diversification there. And the earnings tax is an important tax for us. It provides about 38% of the money for our general fund basic services budget. It's $200 million a year. It's a fair tax because it applies only to salaries, wages, commissions, and business profits. It does not apply to retirement income. So we ask people to pay it only during their working years. So retired people, your Social Security pensions, not subject to the earnings tax. It's also a fair tax because about half of it, about $100 million a year, comes from non-residents. The earnings tax applies to people who live in Kansas City or non-residents who work in Kansas City. Every day we have tens of thousands of people come to Kansas City from Leawood, Lenexa, Liberty, Lee Summit, all L words, to work in Kansas City, and they use our services. They come in and use our streets, our bridges, our police. If they have an accident, whatever, it only makes sense that they should help pay for the services they are using. Otherwise, it's like having a roommate who doesn't pay his or her half of the rent, so to speak. So it's a fair tax because it apportions the tax burden among everyone who uses the city's services regardless of where they live. It's a critical tax because, as I said before, it provides 38% of the monies for our general fund basic services budget. So that is where that funds police, fire, ambulance, weekly trash pickup and recycling, the parks, neighborhood services. Their principal revenue source is the earnings tax, so it's critical that we renew it. And then finally, it's a smart tax because, as I said before, half of it comes from non-residents, so we are exporting our tax burden. Plus, as I said before, we have several different revenue measures that we rely upon. We're not overly dependent on any one. So we have the earnings tax, sales tax, utilities tax, for example. And when one of those taxes dips because of the economy, for example, the others don't, so we're not as subject to fluctuations in the economy. For example, during a recession like now, when the sales tax goes down, earnings tax surprisingly stays pretty level. So we don't have a roller coaster effect on our revenues. So all around, it's fair, critical, and smart, and not uncommon. Over 4,000 cities, counties, and school districts in the United States use earnings taxes for those very reasons. Well, the biggest positives are the fact that it's fair, it's critical, and it's smart, as we discussed before. It's fair because it applies only to salaries and wages and commissions. That is, it's fair because it doesn't apply to retirement income. It's critical because it's a principal funding source for our basic services, the most important services, police, fire, ambulance, for example. And then it's smart because it exports one half of the tax burden. It sets it up so that people who use our services but who do not live in the city but work in the city help pay for the cost of services that they use every day. I disagree with Woody on that. I deal in facts, not fiction. And the facts are very clear that Kansas City, with an earnings tax, grows. Kansas City has increased in jobs. It has increased in population over the last 10 years, particularly north of the river. North of the river, since 2003, we've had over 14% growth in jobs. That's more than any city in Johnson County, and it has an earnings tax. So, because obviously that's the northern part of Kansas City, Missouri. So when you look at the facts, Kansas City continues to grow in jobs. It continues to grow in population. And one of the reasons I believe is businesses want to locate where there are quality basic services. I used to be on the city council. In fact, I chaired the Economic Development Committee, and I learned back then The most effective thing government can do for economic development is provide quality basic services, such as police protection, streets, roads, bridges, fire protection, that sort of thing. And that's what we use our earnings tax money for. So when you look at the actual facts, it's not a job killer. It helps provide the services that create the environment that do attract and keep employers. The election is on April 5, as you know, 2 weeks after the mayor and city council election. If it does not pass, then it will be phased out over a period of 10 years. So in year one, we'd have to cut the general fund budget by $20 million. In year two, it'd be a cut of $40 million. In year three, $60 million, so on and so forth. Those are deep, deep cuts. And as I said before, we would have to somehow replace those revenues with a higher property tax or a higher sales tax, for example. But we'd have to make up the full $200 million as Kansas City, Missouri residents, because we no longer would have non-residents paying half of that tab as we have through the earnings tax. So there would be some very serious belt tightening. Not much more belt tightening can go on. As you probably know, the cities had to cut the budget the last several years because of the recession. We really are down to the bone. So the only alternatives really are looking at other tax revenues. And that's what the opponents of the earnings tax say. They say, well, we need to replace it with some other revenue. They don't suggest what that other revenue measure would be. But the fact of the matter is, looking at governments across the United States, both current, past, and in the future, the basic taxes are an earnings or income tax, which we would no longer have. So you have to look to your property tax. Nobody wants their property taxes increased. Utility tax, that's not very popular, of course. Well, no tax is popular, I guess it's fair to say. Or sales tax, and most likely candidate would be the sales tax. And sales tax is already, in my view, too high. It's over 7% in Kansas City, Missouri. We would have to more than double the sales tax in order to make up for a loss of the earnings tax. No, there's been no talk of increasing the tax to a higher percentage. And while I'm not on the city council now, I can tell you with a great level of confidence that no one would try to do that. That our elected officials understand that 1% is a very fair rate. That's the rate that most cities across the country use. Well, it is correct that it is a so-called flat tax, but the rate is very, very low. So while the state income tax and certainly the federal income taxes are higher rates, or allow you to take deductions and the like, their rates are much higher. Whereas with simply a 1% earnings tax, that sort of makes up for the fact, if you will, that you don't have the deductions. Because what the deductions do is simply lower your income tax rate for federal or state income tax purposes. Well, we lower it in the first place with the city earnings tax by simply making it 1%. Yeah, one thing that a lot of people don't really appreciate is that we only have one chance to vote on this. Under the state law that was passed statewide by the statewide voters, this election will be on Tuesday, April 5. And only on Tuesday, April 5. If it does not pass on Tuesday, April 5, we can't go back and try again in August or November. And we get one bite at the apple. So it's extremely important that we all turn out to vote for the earnings tax on Tuesday, April 5. The opponents focus on the earnings tax as incentive for businesses to move out of Kansas City or not locate here. Well, that's not correct. First of all, the figures show that no, we still have job growth in Kansas City, and our Northland grows faster than the suburban communities. But when a business makes a location decision, they look at all taxes that they would be paying. So not just the earnings tax, they'll look at, well, what is the state income tax? What is the property tax? So on and so forth. So for example, Kansas has a higher state income tax, almost 1% higher on businesses. So if you're in Kansas City, Missouri, and you think about going to anywhere in Johnson County, well, you'd be not paying the 1% earnings tax, but you'd be paying a state income tax that's almost 1% higher. So you have to look at the total basket, the total tax burden, they call it.